We have a very special edition of Startup Central for you. We're calling it a Thursday Dhamaka. The Thursday Dhamaka of Startup Central has not one but two unicorns on the show. And we're going to begin the show with India's newest unicorn. It is InfraMarket, India's newest unicorn. And joining us are the men behind it, Souvik Sengupta, the co-founder, as well as Aaditya Sharda, who's joining us right here on Startup Central. Aditya is the COO. Thanks, guys. First up, a big congratulations to you guys for entering the coveted club, for having a valuation of over $1 billion. Souvik, how does it feel? How long has the journey been? Do you remember how it all started, like it was yesterday?
Yeah, it does feel like it was yesterday. I think it's been a long journey for us. It's been like 4 years since we started up, and almost like 2 years since we got the first sort of VC funding. But it does feel like yesterday. It doesn't feel like it's gone 4 years have passed by. But it feels great. It is surreal. I don't think it is yet sunk in for us. So we are still sort of in the moment, and we're trying to just celebrate at this moment, at least for us.
Aditya, if I can now come to you, $1 billion valuation reached. Have you guys figured out the next target? What is it?
Should be a couple of X from here, right? As in, if we get an investor who is walking into the company at $1 billion, we have to do justice to his investment as well. So yes, I think we are in a big industry. The industry has a huge scope, right? And given the category of products we have, how I wish that we one day you host us for a Decathlon interview.
Yeah.
Sure. So now, just a quick heads up to everyone who's tuning in who may not know InfraMarket. Now, InfraMarket is a tech startup. Yes, it's entered the Unicorn Club, but what do? Well, they're a tech startup hoping to disrupt the construction ecosystem. Souvik, over to you. I'll give you 30 seconds to tell the viewers what is so unique about InfraMarket. I believe it's a $130 billion market opportunity.
It's a $130 billion opportunity. I think we are looking at one of the largest sectors in India. And if you look at the recent budget, the way the country and the government is spending on infra is one of the key revival sectors of the economy. What we are basically doing is we are allowing construction companies and construction projects to procure better, to procure cheaper, and save money on their projects. So we supply to some of the largest projects in India. We supply to the Kochi Metro project, Delhi Metro, Bombay Metro, Rapid Rail Transport System. You name the largest projects in India, we are there, and we help them procure easier. And the kind of spend that is coming in construction, I think, like you were asking Aditya, whether we are, the way ahead, I think we are just scratching the surface as a company. We are very still a very small company in the overall ecosystem, and we have a long way to go.
You have a long way to go, but before I go back to Aditya, Souvik, $130 billion opportunity, but what is it? It's a marketplace where people connect with each other. Are you like an aggregator of all those in the ecosystem?
We are an aggregator of all those in the ecosystem. We essentially work with small manufacturers. Today, there are almost 300 manufacturers who work with us. The smallest of the manufacturers. We take care of the quality, we take care of supply chain, and we actually allow large projects to directly procure from small manufacturers. And we create private labeled brands by harnessing the manufacturing capacity that is already available with small manufacturers. So while we are an aggregator, we are not only an aggregator who distributes the product. We actually have focused more on creating our own brands in this ecosystem. So we have our own brand of construction products, such as concrete, chemicals. We are looking at, we have our own brand of cement. So we have multiple products where we have created our own brand, created private label brands, and we are essentially in our aggregation marketplace, we are almost 60% our own brand and only a 40% where we are only aggregating other brand products. So our main focus area is to aggregate manufacturing capacity from small manufacturers and create large private label brands. How, for someone to relate, I would explain that while we have an Amazon-like experience for construction materials, we essentially focus on the Amazon basics part, where we want to create large private brands in products. So while you have the option to buy some other brand product on our platform, you can also choose to buy our own product, which we can then where we take care of the quality, supply chain, everything else in between.
Okay, that's really interesting to hear. 60% of what's on the marketplace is your own brand. Aditya, by what name does this private label go?
The name is InfraMarket.
Yeah.
That's how we are even branded the private label products.
Like this Amazon.
Yeah, so the brand of the product and the brand
private
of the
label business, I would then...
Yeah.
Okay. Now, I would also imagine that, with this kind of a portfolio mix that you have, 60% is for private labels. Now, not for construction, but everybody else tells us that this is where the margins is, right? I would imagine it's no different for InfraMarket. And can you tell us a little bit of the kind of private labels that you have, Aditya? And, post the latest round of funding, are you looking to expand, bring more kind of construction materials with your own under your private label?
Yeah, sure. So I think, yes, because you're private label, you essentially enjoy a good margin. So on a contribution level, we enjoy somewhere around 25% margin. That's pre-logistics, right? As far as expansion is concerned, we are currently at Hyderabad, we are at Bangalore, Kochi, Mumbai, Pune, Nasik market, and NCR. We plan to now go very dense, right? Instead of now going wide, the strategy behind is now going dense. So, and tier 2 and tier 3 are the places where we are going to focus. So all over Maharashtra, let's say the Vidarbha region, the Kolhapur, Solapur, the tier 2, tier 3 markets, where the real Bharat is, where the real consumption is, that is where the company focuses upon, right? From metro cities, we are tier 2, tier 3 is where we see ourselves. As far as the product line is concerned, we are looking closely at on the launch of our construction chemicals. We're also looking closely at paints on a private label. Plywood and plumbing is also on the radar. So eventually we see InfraMarket as a single brand, multiple product company, right? We do not want to be focused on particular a category of products. So typically, if you see in the industry, there are cementitious company, right? So an Ultratech would be a cementitious company dealing in cement and alike products. Okay, an Asian Paint would be a chemical and ancillary products. But what InfraMarket want to build out, we want to build out a horizontal brand, right? Present across all product lines.
Yeah, on margins, I'll just add here, I think we are India's, I don't know if we are only, but one of the few profitable unicorns. So we are currently, we make money month on month. We are a profitable unicorn, and that's because of a 60% private label play, where we focus very high on unit economics and focus very high on actually making money in each and every transaction. So we are today one of the few PAT positive companies. In fact, last 3 years PAT positive companies in the ecosystem, in the startup ecosystem.
No, in fact, I will take pride that we have been profitable since we were bootstrapped. So 3 years of bootstrap, we were even profitable, PAT positive then.
Yeah.
Okay, so that's the journey that has been, and I was going to ask you who are your competitors, because I don't know anybody else who's doing what you guys are doing, and you've also answered that. Now, you're saying you're very focused on unit economics. Now, it's very easy, of course, in the early part of the journey, and I don't know both your ages. Just from what I'm seeing, you both don't look very, very old. You seem to have learned very early on that, you have to focus on unit economics, and it's at this stage where people want to burn cash at the cost of the bottom line. But if I look at your presentation, Souvik, you guys are not following that at all. It seems as if you're very, very focused on the bottom line, on your margins.
I think we built, that's sort of part of the DNA of the company. We built this bottom up. Like I said, 3 years we were bootstrapped. We sort of built this company on personal assets, on a lot of personal time and assets going into this business. And even when we have raised capital, we maintain the same sort of responsibility for our external money that we would have for internal money. And I think my understanding of the B2B ecosystem is that irrespective of how large a market you're trying to create, if you don't make money on a transactional basis, on a unit economics basis, just because you're at a particular scale and you're getting revenue through discounts, that is sometimes not repeatable when you remove the discounts away, because B2B is not a habit forming environment. B2B essentially always is people buy because they want to save cost on their projects. So if you're only going to give discounts and get customers, and the moment you don't give the discounts, you're going to lose the customers. And we intend to remain this way. We have not had a single loss-making quarter except the COVID quarter. And we intend to remain that. We don't intend to have any loss-making quarters. We intend to remain profitable. And we intend to grow this business out and build out a very large company. But it has to be profitable. It has to be the way it has been done. And that's how our focus has been. And that's the DNA of the entire organization. The entire culture of the organization is structured that way.
So while we focus on growth, right, it cannot be at the cost of profitability. That's our clear standard motto. Okay, the growth will come in, but not at the cost of profitability. We have to remain profitable.
Yeah.
And I think that's what makes us unique than the other startups in the ecosystem.
Yeah.
But Aditya, let me give this question to you. I want to actually get both your views on it. I'll come to you first. This is a market, you have to work with contractors. Now, everyone is not an L&T or, the large players are very organized. If you're going to keep growing, you'll also have to make sure that your tech and your product reaches the unorganized market, because that's when you'll get volumes, I would imagine. And in that disorganized market, literally every rupee matters, because we all know how contractors work, how they try to squeeze as much margins out as possible. Has that not been a big challenge for you, Aditya? Because you're saying at one level you don't want to give discounts, but then you're competing with others who are willing to give discounts.
No, so I'll tell you. Of course, it is challenging, but I think if you understand, it is challenging when you enter a particular market and a particular region. Okay, as a company, we have been hiring people from the pedigree, right? So if you look at the entire leadership team, we have got the CXO level guys from Electro Steel, from SR Steel, from ACC, Dalmia, Stanley Backend. So when you get the pedigree in of your core team, so you have to, they have been there, done that. So yes, the challenges do come. I think the challenges do come at times of hiring the core team. The challenges comes in the new market. Okay, but as far as when you enter a market and you graduate yourself, okay, I think it remains no more, because we are hiring people from the industry. Secondly, I think we have a very stern credit risk policy. Right, we have a risk team coming out from the category of L&D Finance and other top guys of a lot of NBFCs. So there's a stringent credit check that we do, like any other financial institution would do, to give out the credit or to give out any lending, right? So keeping that thing in mind, I think the motto of the sales team is to get sales, but quality sales, right? It cannot be at the quality of the sales that we don't get numbers at the quality of the sales.
Yeah, I just interject here. Like I said, we focus a lot on quality of revenue. And you're right, when you're selling to a small contractor, price does matter. But if you have great supply chain, if you have great procurement, if your tie-ups with your manufacturers are at a price point which makes sense, you can actually meet the pricing of people who are giving discounts without actually turning unit economics negative. And I think that is where we focus on, our logistic cost, our cost of actually getting the product and the service to the customer. We focus on those price points. We intend to get it to a price point where the customer makes it's viable for him to procure that product from us. Obviously, we cannot sell at a pricing which is higher. But you and I both know that there are multiple brands in this construction market which are at a premium. So you have a Ultratech Cement, which is a premium brand. You have Asian Paint, which is a premium brand. People are ready to pay, even contractors, a premium for a high quality product and a quality of service. The idea here is that we believe we can create a similar product. We can create a product like one of how these people have created, how these stalwarts of the industry have created, and we can use technology to make it even cheaper. We can make it cheaper at the same level of quality, and that is where we focus on. Our focus has never been on building out a product line and then giving a discount to the customer. And we find that the market is so large. It's like you said, it's a $130 billion market. There is extra spend coming in construction. I don't think we are fighting for discounts to get revenue here anyway. This is not an industry. And there are no startups in this industry primarily who are competing with us, primarily because the industry is very sort of tough to get into. I don't think it's a situation where we need to compete with anyone for revenues. I don't think it's a situation where we need to give discounts to get revenues. And the idea is to focus on quality of revenue and at the same time make it cost efficient for a contractor, just the way the large companies in India have done. So, and use technology to sort of further distribute costs, further make it cheaper for them to procure.
Okay, enough business talk, guys. And before I go into a short commercial break, it's always good to look back at the journey as well. Souvik, you want to tell us how it all started, how this idea came about, how you met Aditya? We always talk about the successes, but every startup, I don't know if it happened to you, typically goes through multiple, death-like situations as well, near-death situations.
Of course. So I think this started in 2016. So me and Aditya, we have been friends for a long time. We stay at the same place. So we kept meeting, we kept discussing. And the idea came from so many companies in the global ecosystem who were doing asset-light manufacturing setup. So our idea was always that can we create brands in construction materials without owning the manufacturing? And you're right, we have had many experiences where we've also faced a lot of issues, faced a lot of failures. I think we've, like I said, 3 years bootstrap. When we first went to the market to raise capital, the feedback always was that startups in construction will not succeed. This is not an industry which is going to change. The feedback we also got was, this is a very difficult industry to enter. And the first check of capital was very difficult to get. Obviously, growth got hampered for a long time. Indian banks are slow to help the startup ecosystem if you don't have enough equity. So we faced a lot of difficulties over 3 years to grow this out. But it paid dividends when we got the first person who had conviction on us. When Axel wrote that first check, it was a lot of conviction they showed, in an industry where no one else had done it. In startup founders who are not typical startup founders, where we were not coming from we came from industry backgrounds. We did not come from we were not ex-founders. We were not someone who had sort of built out other startup companies, but they showed a lot of faith in us, and they kept valuing the fact that we focus on unit economics. I don't know if it'll be fair for me to say that we are where we are today, and we believed that this is what we were building on 2016. So in 2016, when we and Aditya met, the idea was just to create an asset-light manufacturing platform. But whether that we'll be able to create brands, that the fact that we wanted to go pan-India with large brands, all that thought process has evolved over time. This is not the thought process we had in 2016. And as we look back, we can connect the dots and say, this is what I thought. But the fact remains, a lot of this happened by accident also. A lot of this also happened because, the ecosystem pushed us in a certain way. So I think we've enjoyed the journey till now. I think, like I said, we've just scratched the surface. Failure, success all aside, we are still a long way to go. And I think the real pressure, the real challenge will come now. We'll have to build this out over the next 3-4 years. Can we take it 10x from here? And that's where I think the real challenge will come, and hopefully we can. And we're still sort of a long way away.
Still a long way to go. Not satisfied by just entering the unicorn club. And, that's what a lot of now investors also say, okay, unicorns both ho gaye, where are the decacorns? So here's wishing both of you the very best. Thank you so much for agreeing to do this interview. It's been an absolute pleasure. That's InfraMarket for you, rewriting the rules for the construction market. It's a massive opportunity, $130 billion construction, not something that, you think of them procuring online, aggregator for construction equipment, material and all of that. One of its kind, and now a unicorn. We'll take a short commercial break, ladies and gentlemen, but stay tuned. Coming up on the other side, another unicorn. It became a unicorn in 2020. It is Razorpay, and it wants to reward its employees. Lessons to be learned from Razorpay here for all you founders and startups. Stay tuned.